All right, boom. We are in. Now we will go break even right here. And boom, all right, straight W. With this quick scalp trade on BitGet, we made $806 profit. In this video, you will learn the highest win rate breakout strategy for crypto. My goal is that by the end of this video, you can start using this strategy right away and make money with this today. First, you will learn the strategy with specific rules. Then I will show you 5 clean trade setup examples. Then I will show you 5 bad examples, which you should avoid. And then in the end, I will also show you 1 trade example directly on BitGet. As an extra bonus, at the end of this video, I will show you a sneaky technique how to avoid even more losses on top of it. The reason why this strategy is so amazing is because in the crypto world, you constantly have massive breakouts upward and downward. And you need a consistent, systemized way to capture these breakouts while also avoiding as many false breakouts as possible. These are also known as fakeouts, which means you need specific rules on when to take them and when not to take them. All of this and much more is exactly what you will learn in this video, so stay tuned, and if this sounds good, give this video a like, and let's start diving into it. If you want to make as much money as possible with this strategy and have an additional extra edge over all other traders, you can go in the description and use my link and make an account on BitGet, which saves you an exclusive 30% on trading fees. The 30% trading fee discount is so significant that you will instantly feel it when you trade, because on every single trade that you take, you will have more money in your pocket without any extra effort. And especially when you trade a lot, this will make a huge difference to your profitability. If you already have a BitGet account, you can make a new one with a different ID document, or you can just simply close your old account and make a new one with my link, because only then you have the 30% discount on your trading fees. This means you have the best trading conditions anywhere in the entire world on any top tier exchange that you can ever get. And also at the same time, you support the channel because part of the trading fees, which are left over, which only go to the exchange, go to me. So it's a win-win. So grab the discount and use my link and benefit from this on every single trade, because this makes a huge difference. So use it and let's get into it. For everyone who's supporting me, who made their BitGet account with my link, who's actively trading there, will also get access to the VIP community for free, and also a resource section, which you can see right here, where you get exclusive resources such as, for example, the exact rule sheet of this strategy, and also many other things only exclusive for those who made their account with my link. And also you get feedback on every single trade that you take from me and also many other experienced traders. So make use of those free resources, because people in here are killing it every single day. In this video, I will give you everything on a silver platter, and I will try to make it as simple and as easy as possible for you. So first of all, there are only 4 requirements. 3 are a must and 1 is optional. The first requirement is select a coin on BitGet with 5 million or more 24-hour trading volume. First, simply go on trade, then select futures and click on this. So now we're here on the Perpetual futures on BitGet. Next, we will go right here and we will click on V. This is sorting all the coins based on highest volume. As we can see here, Bitcoin has right now over 9 billion 24-hour volume. Ethereum has 4 billion. Anything above 5 million is good. If you want, you can also trade the smaller coins below 5 million, but in the beginning, to be safe, I would trade anything above 5 million. So for example, right here, Aptos is a good coin, Tau is a good coin, Matic, also ARB is a very good coin, and especially right now, super hot is Pepe, Wifcoin, Dogecoin, Bitcoin Cash is good also, and also Shiba is also very good for this strategy. Number 2, and here comes a little secret. Check on TradingView the coin that you selected and make sure that the average price swing is at least 0.5%, ideally between 1 and 2%. Price swing just means a swing high or a swing low. Every swing should be around 1 to 2%. Why? Because if you have a coin that has very small swings and very small price moves, the trading fees will eat up most of your profits. And here's the secret. If you select a coin which has big percentage price moves, you will be automatically more profitable just because the trading fees make a smaller proportion to your take profit zone. Also, like I said, if you used my link, you also save 30%, which again is a huge advantage to your profitability. So use my link for the account, and then also make sure you select a coin which has big price swings. You will see this makes a huge difference and you will make a lot more money. This takes me to step number 3, which is how you prepare before you even trade. Now, this step here only takes 2 minutes. This essentially is like a warm-up routine before you get into action. So I will show you now how to do this. For today, for this example, we will use Pepe. Why? Because Pepe has amazing volume, over $101 million, 24-hour volume. And also Pepe has big price swings and overall is a coin that loves to break out. So that's why it's a perfect example. But like I said, you can use it on any coin you want. Now, we are right now on Pepe on the 1 minute chart. Now I will show you step number 3, which is the preparation routine before you start trading. This is very simple, but you have to take care of this and do it precisely. So right now, let's pretend we start right now here from scratch. Okay? What you want to do is identify the 3 most local support lines and the 3 most local resistance lines. So for example, we can see this here is the highest swing high. This here is the highest swing low. So what we do is we take the line, aka here the trend line tool, and we will put a resistance line exactly right here where the candle body is closing. Not where the wick is, exactly where the line is closing. It's really important that you do this every single time the exact same. Otherwise, you have no standard how to do it. And otherwise, you cannot apply the specific rules on how to avoid many losses. So always look where the body closes and use it here. Now, swing low is right here. Now, for all the people who are advanced, who are already in my VB Discord group, will know that technically speaking, on every single swing, aka every single high and low, where you have between 2 and 3 counter candles, is a swing where you should put a resistance or support. So technically, strictly speaking, you should also put one line right here and also one line right here. However, we are not doing this. Why? Because if we were to break out here, for example, there would be no room to breathe because this is a very short distance. Also, same thing as here. So in the beginning, just make your life easy and only take the obvious ones where you have some room to breathe and not every single baby swing. Later, you can do this. For now, don't do this. So now we have the first resistance line and the first support line. Now we need 2 more support lines and 2 more resistance lines. Above here, we can see this here is our next resistance line, which is a dominant swing, aka a resistance line. And also we can see in this vicinity, we have also one more up here. So this here would be the 3rd one for top, all right? So now we are prepared and we have 3 resistance lines. All right, and done. We now have our 3 most local resistance lines. So now we need 2 more below. If there are no more support lines in this region and in this vicinity, then you don't have to draw them. Do not spend the time and scroll hours back here and check every single low and swing. Why? Because this is not relevant for the vicinity and for the region where we are trading now. We are trading local breakouts, aka local reactions, where the price wants to break out from the recent swings, not from swings from hours ago. Okay, so let's check on the left a bit. Here we can see this was the lowest low already. And we can see here, there is no more further low for quite some time. Okay, yes, we have one swing here. So technically, we could put this swing right here. All right, we can put one right here. And we can put also one right here. And we can also put one right here. And we can also put one right here, but it is not really fully necessary. Why? Because this here is already very far back, away from the region where we are trading. Now step number 3 is finished. We have our 3 most local resistance lines and we have our 3 most local support lines. Now there is one more optional requirement which you can use. I will not cover this now. I will cover this later for all the advanced traders who want to make the most money ever possible. So for now, let's skip this, but I will circle back on this later in the video. So now we are fully set up. We have our coin. We check the price swings are good and large on Pepe. And also we did exactly this just now. This just took us 2 to 5 minutes. Once you drew all your lines, you just simply have to wait until the price either comes to your resistance line or to your support line. And then you want to pay attention very closely and look for only 4 things, because there are only 4 rules that you have to consider every single time. First of all, if you break a resistance line, you do a long trade. If you break a support line, you do a short trade. Now, what exactly does a breakout mean? A breakout means, rule number 1, the majority of a candle body has to close below the support line. Check. Number 2, the bottom wick of the breakout candle has to be maximum 30% of the entire candle size. Check. The wick is very small, which is good. And number 3, there must be enough room to breathe to get a 1-to-2 risk-reward ratio for the next support line. In this case, we can see the next support line is very, very far away. Now, this is a big benefit because this means we have lots of room where the price can fall. If, for example, the next support line was like right there, we would not take the trade. Why? Because if we enter a short trade here, we have a potential bounce danger zone where the price will come back immediately. So for that reason, check always that the next support line is far away and you will get at least a 1-to-2 risk-reward ratio. Rule number 4, the breakout candle must not be gigantic. What does this mean? This means that this candle must not be completely out of proportions in comparison to the regional candle size. Why? If this breakout candle was massive, like let's say this candle was like this big all the way, this would give you a very unfavorable risk reward. Why? Because your stop loss always has to be behind your breakout candle and your target would have to be so far to get a 1-to-2 risk reward ratio. So just simply check, is this candle around the same size or a bit bigger as these candles? Yes, take the trade. If this candle is humongous, skip the trade because your risk reward will be bad. So now, you want to wait until the candle closes. Then this is your signal candle. The next candle, which is opening right after your breakout candle, this is your entry candle. So again, this is your signal candle. This is your entry candle. You will enter with a market order like this. Boom. The stop loss goes above the breakout candle wick. If the breakout candle has no wick, you have to use the candle before or slightly more than the candle body. So for example, like this. And also, as a target, there are a few options. The first option is you will use the last support line or you will do a 1-to-2 risk reward ratio. In this scenario, we can see the next support line is very far away. So in this case, I will just simply use a 1-to-2 risk reward. Why? Because the likelihood of getting our target hit is higher. And we want to catch as many guaranteed wins as fast as possible. So this here is a perfect valid trade based on every single rule. And also, we will mark this now with a green circle, which means it was a win. If this was a break even, we would use here the white circle or red for a loss. I will show you many more examples and amazing rules on how to skip almost every loss. So now let's go back to our rule sheet. As you can see, the rules for a long and short trade are the exact same, just the opposite. For a long trade, you want the majority of a candle to close above a resistance line. You want the top wick to be maximum 30% of the candle body. And also you want at least enough room to breathe for a 1-to-2 risk reward ratio. And again, the breakout candle must not be gigantic because otherwise your TP would have to be very far away to get a 1-to-2 risk reward ratio, which gives you a very low likelihood of getting a target hit. Now we will cover 5 clean trade setup examples and then also 5 ugly ones. So let's get into it. First example, here we have our swing high, first resistance line, also second one, and there's no other above right here. So we only have 2 in this case. And for the swing low, we have number 1, this swing low here, support line, and also 1 right here. So now we have our 3 support lines, which is 1, 2, 3, and we have our 2 resistance lines, which is 1, 2. Now, let's go over the rules very slowly. As we can see, this candle closes past this line. So let's go over the rules step by step. First of all, the majority of the candle body is closing below, which is this right here. Check. Number 2, the bottom wick is not there, aka very small, aka less than 30% of the entire candle body, which is rule number 2. Also check. However, rule number 3, the next support line has to allow at least for a 1-to-2 risk reward. Essentially, what you want to look at is, if you see the breakout candle is already quite close to the next support line, you already know that you will not get a 1-to-2 risk reward. Why? Because the price does not have enough room to breathe. Because every single support and resistance line is like a bus stop, a potential area where the price might react and might stop. For that reason, you want them to be far away and not right at your nose, because otherwise it's a very high danger zone. So for example, if we were to take a short trade now, aka we enter after the candle, enter, stop loss not here. Why? Because this candle has no wick. For that reason, we have to use a little bit more. So for here, we would use about like right here, because this would be the average wick size that this candle and all these other candles would have. And as we can see here, we cannot get a 1 to 2 risk reward. We can't even get a 1 to 1. So this here would be a very unfavorable trade, and for that reason, we would skip it. Also, rule number 4, for example, here is also not a problem because this candle is just slightly bigger than all the candles here in this vicinity. So for that reason, rule number 4 would be also a check. But we only take a trade if all of those 4 rules are applied. Same for long trade, the exact same thing, just in the other way around. Let's continue. We come down, we break it, new support line, we come up, we come down, new resistance line. So now we have one here, one here, one here, and we have 1, 2, 3 here. 3 local support lines and also 3 local resistance lines. Here is a breakout candle, aka it closes below the support line. But again, the majority of the candle body is behind the line, not past the line. Also, we can see the next support line is so close. For that reason, we have 2 reasons to skip this trade. Let's continue. Again, another candle. Again, the majority of the candle body is not past the line. It is behind the line. So again, skip. Next, here, new support line like this and like this. Again here, nothing comes close to this line here. So also no breaker to the upside. The next example is right here. The majority of the candle body closes above. Check. The top wick is less than 30% of the entire candle body size. Check. The candle size is not gigantic because it's only a bit bigger than all these candles. So it is quite large, but not gigantic. Check. But again, rule number 3 doesn't apply. Why? Because the next resistance line is so close. That's why we don't have much room to breathe, right? So if we were to enter a long trade right here, with stop loss below the lowest wick of the breakout candle, we would not even get a 1 to 1. And like I said, ideally, you want to have a 1 to 2 risk reward ratio. So in this case, it is also an obvious skip. Here we have another breakout with this candle. Again, majority of candle body is below, also skip. And also again, no room to breathe, again, also skip. Now, next breakout. This is a good one. Why? Because all 4 rules apply. The majority of the candle body closes above the line, check. Top wick is small, check. The candle is not gigantic, check. And there is no resistance line anywhere inside in this region. For that reason, we have open air or the price can develop higher and higher. So again, we enter right after this candle is closing with a market order. Stop loss goes below the candle. Normally it would be here, but because the wick is so small, we have to place it a little bit further to be safe. And we target a 1 to 2 risk reward, which in this case gets hit perfectly and smoothly. So this here is a perfect winning trade. Now again, we come up, we come down. New resistance line, new support line. Again, this candle closes below. We have enough room to breathe. Bottom wick is small. Majority of candle close below. The candle is not gigantic. All rules apply. This here is our signal candle. The next candle is our entry candle. Market order entry. Stop loss past the wick. And we target a 1 to 2 risk reward. We can see here, there is enough room to breathe. So that's why we can comfortably take the trade. So here we have 2 wins back to back. If you apply these rules, you will have many, many wins back to back to back to back. However, it gets even better. So let's continue. Here's our next example. This is our local swing high, first line. Local swing low, first line. Then let's check on the left. This is the next swing high, aka next resistance, and also the next one. Now we have our 3 resistance lines. Now we need 3 more on the bottom. So this here is the first one. The second one is here from all the way to the left, and there is none other below. This means if we cross past this line, we potentially have very, very much room to breathe to the downside. So now, let's check. First now, we wait until any candle approaches any line. And then you want to observe if the candle closes past the line. As we can see here, this is the first attempt. Now, I will give you 3 seconds to think about whether it's a valid trade or not. Correct. It is not a valid trade because the majority of the candle body closes behind the line, and also the bottom wick is about 50% of the entire candle. And again, the bottom wick must be only 30%. So here's a fake out. 1, 2, which means this second upswing candle confirms this is our new support line. And now we wait for a new break either here or, like I said, here. Again, we could also make a line here, but there's no point. Why? Because if we were to break out here, there's no room to breathe to here anyway. For that reason, we can just save ourselves the time and just delete this line. So again, here we have our next breakout candle. Majority candle close below, check. Small bottom wick, check. Candle, not gigantic, check. And we have lots of room to breathe. So this here is a valid trade. Again, this is our signal candle. The next candle is our entry candle. Enter, stop loss past the wick, and we target a 1 to 2 risk reward ratio, which in this case is like this, and it's also immediately a profitable trade. Within one candle, we are hitting our profit. So again here, winning trade. Right here, we have a very aggressive, strong uptrend. As you can see, the price is going up super quickly. This here was the last swing high, which is our local resistance line. We can see here that this candle is the first attempt where we try to break the resistance line. As we can see, the majority of the candle closed below. For that reason, again, instant skip. Next, swing up, swing low. Here, next attempt, but again, majority of candle is below, again skip. Again, new line, because we come up, we come down. This second candle is confirming this here as our swing high. Again, same thing here. This second candle is confirming this swing high here. We need either 2 medium candles or 3 small candles to confirm a swing high or a swing low. So again, skip, next, skip, next, new swing high. Again, majority of candle close below. Check our third attempt. Again, it's a skip. The majority of the candle closes below. This, for example, would not be classified as a swing low. Why? Because from the low, we only have 1 candle up. So this here is just a breather and not a swing. So that's why I would not make a line here, and I would not trade this breakout here to the downside, because this here is not a proper swing. I would need another bullish candle to confirm this here as a swing low. All right, let's continue. This is the next swing where you have 2 to 3 candles counter. So this is our next low that we can break. Now again, since this is a failed breakout, we have to update our line, and this here is our new resistance line, which we have to break for a long trade breakout. So again, let's do this here properly like this, and perfect. Now, as we can see here, this candle tries to break, but again, majority of candle close above. So again, it's a skip. Here's our next example. Swing high, swing low, line, line, majority candle close below, check. Small bottom wick, check. The candle is not gigantic, check. Also, we have enough room to breathe here for the next support line to get at least a 1 to 2 risk reward ratio. In this case, it's not a 1 to 2, it is a 1 to 1.9, which is a bit worse. But again, here we have lots of empty space. For that reason, I assume we have lots of space to fall. For that reason, I would also take this trade. Again, some traders also take a 1 to 1.5. But in the beginning, I recommend you only take the trades if you have enough room for 1 to 2. But if it's a clean setup, you can also take 1 to 1.8 or 1 to 1.9. It is also a good setup. The take profit target is either the next support or resistance line. And you can either target the wick, which is where most of the liquidity is laying, which is what I and most advanced traders use. Or you can use the body also, a bit more conservative. Or like I said, if the next line is very far away, be conservative and only target a 1 to 2 risk reward ratio. This means you will hit many more wins in a guaranteed fashion. Us targeting the wick of the next support line gives us a 1 to 1.93 risk reward, which is almost a 1 to 2, which is still okay. Not perfect. If you are super strict, you would actually skip this trade. But again, it is like a gray zone, and actually you could take it because the risk reward is not too bad. If you want to take this strategy to the next level and make as much money as possible by cutting out more losses and increasing your win rate, there are 3 things you can do. First of all, there are 2 extra optional rules you can apply, and also there is 1 optional sneaky trading technique which you can use to cut out even more losses. Now, first of all, I will cover this trading technique because this here is very sneaky and it almost feels like unfair, but many people have been using this successfully, and I will cover it for that reason. So basically, as soon as the price advances into your profit zone, you will go break even, aka you will increase the stop loss into a tiny profit zone. Why? This protects you from many fake outs. Yes, the disadvantage of using this technique is, of course, some trades where you first enter, then it goes up in your profit zone, it wicks back down a bit, and then hits take profit. Those trades will be skipped. So you will skip some wins also. However, based on my experience and based on the experience of many other experienced VIP traders, this actually cuts out more losses than wins. And when something avoids more losses than wins, it is a net positive for your profitability. So this here, again, you can practice this and try this. Also, I showed this also in my last strategy video. I showed this live on BitGet, how you actually put this into action. So if you want to watch the video, you can watch it right here. I will link it also in the description. But also maybe this time, I will also apply this technique. So again, this is optional, but this will increase your win rate. Now, let's go into the other 2 rules because they are really important and they are crazy. So now, let's go on TradingView and let's cover this. The 2 extra rules are, number 1, avoid ascending channels and also descending channels, and also skip if there is a trend and objection. Essentially, Those two rules are the exact same. Why? Because an ascending channel is nothing more than two parallel trend lines. For definition, a trend line is the exact same thing as those lines which we draw right here, except they are angled. They are also support and resistance, just simply in an angled manner versus a vertical line. This strategy works best if the price is in a sideways consolidation and you only have sideways horizontal resistance lines and sideways horizontal support lines. If the price is right now in an ascending channel, aka the price slowly drips up, slowly down, slowly up, you should not trade this. These two rules are optional, which means they are not mandatory, which means in the beginning, you can completely ignore them. However, if you want to make the most money possible and be as profitable as possible, you should take the time to understand this, because this is not so difficult and this will make you more profitable and you will make more money overall. So look, right here, we have one section. Here we can see we have an ascending channel. Also, in simple words, an upward channel and a downward channel. Now, this can be a very tight channel or a generous channel. It doesn't matter. But let me show you why you should avoid it and also how you can see it. Look, right here we have an ascending channel, which means we have constant higher highs and we have constant lower highs. And the most important part, you can connect every low and every high with a trend line, aka with a line of all the highs which you have here and all the lows here. The problem is, every time you have here a breakout, essentially you are knocking at a wall, which essentially is a trend line objection. Because, strictly speaking, a trend line support resistance is the exact same as a regular horizontal one. Here's the first example. We have here a high, we have here a low also. We can also make a line right here, boom. And we can see here, this candle, the majority close above. So normally, this would be a valid setup. However, as you can see here, the price has no swing here and it's just creeping a bit down, a bit up, a bit down. So this here is like a micro ascending channel. And for that reason, once you break out here, you are essentially right at a wall, at a resistance wall, where the price gets rejected from. For that reason, you should avoid this if you apply this extra rule. This is a little bit sneaky because this here is so tight and a very small channel. However, this will become more clear when you see the next few examples. Next, this candle here is invalidating, aka destroying our ascending channel. So once we come back up to here, essentially we have a very nice box again. We have here a swing high like this, and we have a swing low, essentially exactly what I showed you right here. We have a sideways channel just like this here, all right? So once we are here, this is a regular breakout. So you would enter right here, stop loss below here, and you would target a 1-to-2 risk reward ratio. Why? Because here in this vicinity, there is no further resistance which we can target. So this here would be a valid trade. However, if you apply the sneaky style, you would enter here. Once the price goes about this much in your profit zone, you would put your stop loss into a small profit right here to secure your trade at break even. And then once you come back down, you would get stopped out at break even here. That's why this would be a break even. If you don't use the sneaky style, then this would be a loss. However, with the sneaky style, this would be a break even. Now let's continue. We have here a new high. And once you have two highs, which are very close to each other, essentially you can connect them with a trend line, such as I've done right now. Same thing for low. We see we come up, we come down. We can see here, these are very close, which means we have to draw trend lines. As you might remember, this is also an option number 4 in the requirements, because just as you're supposed to draw the 3 most local SR zones, you should also draw the trend lines if you want to trade with those 2 extra rules right here to cut out more losses. So now let's go back and let me show this to you right now how to apply it. So we can see here, we have 2 highs which are close, which means what? We connect them with a trend line. Same as here. 2 lows, very close, we connect them. Now, once we are here again, very close to potential breakout, we can see that if we break out here, this would be also a skip. Why? Because here, you are essentially very close to the trend line, which is, after all, a resistance line. Because every time we're here, we potentially get rejected, just like if we come to here, we also get a potential bounce on the trend line. So that's why you would not take this trade, because from here to here, is not much room to breathe. And the rule is you always need enough room to get at least a 1-to-2 risk reward ratio. In the beginning, to make your life easy, I would just suggest, first of all, pick a coin and check if it's in a very nice sideways channel, or if you can see that the price is slowly creeping up and down like this in a channel or like this, I would just skip it add the coin to your watch list right here, and pick another coin. So for example, if you can see that every high is only minutely higher and every low is only minutely higher also, then you can connect them to a channel and you would simply avoid it, because every time you surpass the last high, you are essentially at a wall where you also can no longer have room to breathe, where the price can develop. Now, next example here, same thing. We have now 1, 2, 3 highs, which we can connect right here on those highs. And we can see here, majority of candle close above, check. Small top wick, check. Candle is not gigantic, check. This here would be a regular skip because majority close below, so no trade here. This here would be a clean setup. However, you don't have enough space to get a 1 to risk reward because the next support line is already so close. Even if you target here the bottom wick, you only have like a 1.77 risk reward, which is very gray zone, so I would not take this at all. However, even if you were to trade very riskily, in a risky manner, this would be also a break even if you trade the sneaky style. Why? Because once the price goes a bit in your profit zone, you would raise the stop loss, aka you would lower the stop loss into small profit right here, and you would get stopped out in break even once again in a sneaky way. Now again, let's go to here. Again, breakout, all rules apply. But again, it would be a skip. Why? Because from here to here, you don't have enough room for a 1 to 2 risk reward ratio. As you can see here, stop loss here, and you can barely get a 1 to 1, okay? So again, skip. Also, same thing here. You can see how in the same pattern, the next high is only a bit higher. So like I said, make your life easy and just simply avoid when coins are in this pattern like this, okay? If you trade with those 2 extra rules in this entire section, okay, from here to all the way to here, these rules would have perfectly, consistently saved you from 4 losses and 4 break-evens. However, let's say you ignore the rules and you make your life simple. You would have 4 losses and 4 break-evens. This would be not an issue. Why? Because generally speaking, you always have a 1 to 2 risk reward. This means that this entire horrible section, which actually is very normal and very rare, that this section lasts so long, you would essentially be again to break even after only 2 to 3 wins. Why? Because every win, you make at least 2 times the amount that you lose. So if you get 3 or 2 wins in a row, all this would be again balanced and you are back to normal. But like I said, if you want to optimize this and avoid losses even more, take some time to practice this and to get familiar. Or again, if you want to make your life easy, just avoid coins like this, add it to your watch list, and just pick a coin which is not in an ascending or descending channel. Here we have 2 more valid setups. Right here, we are breaking the trend line, aka we are surpassing by a lot all the trend lines. So here you would enter right here, stop loss below the last wick here, because this has a small wick. And again, you would target a 1 to 2 because there's no resistance line inside, which means the price has lots of room to develop. So again, straight win. And again here, very nice sideways, sideways, breakout, enter, stop loss, 1 to risk reward ratio. Again, this would be a break-even trade if you trade sneaky. Why? Because you enter, and once you are here, you would go break even with your stop loss, and you would secure your trade at least at a break even. So this here would be a break even. That's why I put a white circle here. And as you can see here, we have a swing high, we have a swing low, and this candle does not fully break this line because the majority is below. So this here is also a skip. Now let's continue. This is the last swing low. The majority of the candle breaks, check, 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 check. But again, skip. Why? Because from here to here is not enough room to breathe. You can't even get a 1 to 1. That's why it's a skip. Again, here also, no majority break, skip. Again, here, no majority break, skip. Again, here also, no break, skip. For this example, I will give you 2 seconds to decide if it's a skip or not. So yes, you'll be right. This would be also a skip because there's no room to breathe because the next resistance line is like a wall right at your nose. Now here we have the next one. This would be also a skip because the majority of the candle closes below. Again, skip. Now this here would be again valid because the majority closes above this resistance line right here. And you get a very nice 1 to 2 risk reward ratio. Here, enter, stop loss below here. Normally here, but because the wick is small, you would use a little bit more and you would target a 1 to 2 because again, there's no other resistance line, which means you have open end to the upside and you get here a 1 to risk reward ratio. However, if you trade sneakily, this would be also a break even. Why? Because after you enter and after the price goes a bit in your profit zone, you would raise your stop loss immediately. So again, depending on your trading style, this would be either a win or a break even. Another clean example, nice support line, majority break, check, small bottom wick, check, not gigantic candle, check, lots of room to breathe, check, enter, stop loss, target, win, that's it. No majority close above, skip, no majority close above, skip, and also majority close above, enough room to breathe, everything checks, 1 to 2, and it's also a win. Now here we continue, again, majority close below, check, stop loss above here, because this candle has no wick, and we can see we have lots of room to breathe, so again, very nice, 1 to 2, and straight win. We can see here, if you were to miss this entry, you have another re-entry here, where the majority closes below, you would enter, stop loss, target, also straight win. Next, swing low, swing high. One candle, second candle, swing low confirmed, line confirmed. We can see here, this candle, the majority close below, check, enter, stop loss, target. Also, straight win, 1 to 2, risk reward ratio, and again also, enough room to breathe. So in this section, we have 5 wins in a row, 5, which means technically, after this section, you can afford to lose 10 trades in a row and still be and break even, okay? Now this will occur many times, and like I said, with those extra rules, which are optional, you will also perfectly manage the ugly areas and you will come out victorious. Now let's continue here. Again, huge humongous candle, way out of proportion. Now this would be also a skip because you would have to target very far down to get a big risk reward, because this candle, if you compare this vicinity, is way out of proportion. That's why you would not take the breakout. Again here, also skip. Why? Because majority of the candle is above, and also bottom wick is quite long, so also skip. Same thing here, majority close below, check, but bottom wick is more than 30% of the candle size. So here also skip. Let's continue. This would be a break-even trade. Very nice support zone, majority break below, enter, stop loss, target. If you use the sneaky technique, this would be a break-even trade. If you don't use it, then this would be a confirmed loss. And losses are completely normal of any trading strategy. No matter how good the rules are or how good the strategy is, you will always have losses. But again, you can avoid it by using the sneaky technique. Now, let's continue. Again, no majority break, skip. Here, majority break, enough room to breathe. Again, enter, stop loss, target, win. Also here, no majority break, skip. Again here, this would be decent. You have enough room for a 1 to 2 risk reward, targeting the bottom wick here. And again, this would be a break-even trade if you trade sneakily. Even if you don't want to trade in the sneaky style, I would recommend once the price goes about 1/3 or half in your profit zone, I would honestly recommend you put your stop loss in break even, aka in small profit, to cover also trading fees and also volatility. This will secure you, because nothing is worse than seeing a trade which was half in your take profit zone, right? And then take a full loss. That's why it is up to you whether you want to go break even right away almost, or how much you want to wait until you go break even. Now this is up to you and what your preference is. Me and many VIP traders trade very sneakily, so you will see this also in today's trade example. Next section, we have 2 breakouts here. I will give you 3 seconds to decide. Yes, correct, we would not take it, because again here, bottom wick is way too long and you don't get a proper break here also. And again, if this was the valid candle, which it is not, because this is the first attempt, then also you would have no room to breathe. Here we have 2 more breaks. We have one right here and we have one right here. I will give you 3 seconds to decide. And correct, this here is a skip, because from here to here is no room to get a 1 to 2 risk reward ratio. And also here, obviously, you have no majority break and a way too long bottom wick. So this here is also a skip. Now this one again is valid. Majority close below, no bottom wick. The candle is large, but it is not gigantic. So also it is valid. And again, no bottom support line, which means lots of room to fall. So all 4 rules apply. So again, you would enter here, market order, stop loss above here, because there's no top wick. So this would be too tight. This would be decent, and you would get a 1 to 2 risk reward ratio, and it would be also a win. And straight after, in case you miss it, another entry, majority break, everything applies, enter, stop loss, target, also win. And again, finally, we have here also a confirmed loss. We have here a support line. We have here a resistance line. The majority of the candle close below, check. Everything is nice and clean, check. you enter, stop loss, target. So here also, you have a straight confirmed loss. And again, this is completely normal. In fact, after having so many wins in a row, I almost feel bad. And I'm happy to give some money back to the market because we just took out so much money. So again, this should be normal. And I will take this loss while smiling also at the same time. So again, be prepared to take losses, especially also in the beginning. You will misjudge many trades. And this brings me to a special tip. Start with little money. Don't trade with too much money because then you will be stressed. Start with a small amount and practice first until you're consistent and until you are happy with your execution. If you want this rule sheet, which you can also print out and put on your desk or hang on your wall, you can get this rule sheet in the VIP Discord, which by the way is free. You can get this in the resource section right here. You can print it out, and also many other resources. You just simply have to go qualify yourself, whether you're a beginner or a pro trader, and then just simply confirm your user ID from the BitGet account like this, put it in here, and you can join the VIP Discord group for free, and you get all the resources. And also, you can post all your setups in the Setup Ideas room, and I give you one-to-one feedback on your trade entries and on your trade, and also the experience of many other pro traders who are already trading this every single day for a long time. So if you want, this is a hack to learn this even faster. The link to the VIP Discord is again in the description, and also again here for BitGet for the 30% discount. Also, quick shout out to one of our young VIP traders who actually also finished the mastermind. He made his own strategy, which is a fake out trade setup, which is actually also very sneaky. So again, you get this video also in the VIP Discord group for free. You can watch it. He's trading very nice now in a very sneaky style, which he developed himself. So again, very nice people here. And now I will show you a trade example directly on BitGet. All right, now we have a potential long trade setup here. We are right here at a resistance line. And the good news is, above this resistance line is no other resistance line in this local region. This means that if we break out, the breakout could be massive percentage-wise. This means we would get a massive good risk reward. In the next window, we already have BitGet open, so we can enter a trade immediately. As you can see, Front is a brand new coin, which is available on BitGet to trade, and it's a wild coin with massive price swings and also lots of volume. That's why this coin is amazing for this example and for trading breakouts. Our second option here is of course Pepe. We could have a breakout up here, which is very good. Here, it would be too tight, so this would be a skip. But if we break out below here, then this would be a massive breakout opportunity. Depending on how this candle is closing, we are either entering or not entering. So far, it looks all right. All right, boom. We are in. Stop loss now will go below right here because this breakout candle has no bottom wick. For that reason, we have to set it a little bit lower to be conservative. And because there's no other resistance line on top, we will just target a 1-to-2 risk-reward ratio, which is very conservative because we want a very high likelihood of hitting our target. Our entry is amazing. Stop loss is here. And as a target, as I said here, we will target a 1-to-2 risk-reward ratio, which is right here. So let's set our take profit target. All right, this is our target right here. Now we have a 1-to-2 risk reward. So here's our entry. We actually got a slightly better entry than normal because once we entered, sellers immediately pushed the price down. And during this move, we got entered in the trade, which is actually very good. So now stop loss again is right here. And target is up here, 1-to-2 risk reward ratio. All right, we are now going break even. All right, now we will go break even right here. And boom, all right, straight W. All right, with this quick scalp trade on BitGet, we made $806 profit. All right, the trade was quite quickly. In the beginning, we had some resistance, all right? But after some breather, we got straight to take profit. And this was also a very quick breakout scalp trade. Now, the reason why this breakout trade was so beautiful is because above this line was no further resistance. Like I told you, for example, on Pepe, if we had a short breakout here, we would skip it. Why? Because from the breakout to our next resistance line is no space. Essentially here, we have no space for a good risk reward. That's why you should ideally wait for a breakout where above you have essentially open end, because usually those are the biggest breakouts and you can catch ridiculous risk reward ratios. We could have gotten also a 1-to-3 or 1-to-4 potentially, right? But I prefer to have smaller conservative targets and to have more small wins. $800 is not a lot, but if you take a few of those clean trades every single day or every single week, this can accumulate to a lot. You can get this Old Money Stacks strategy rule sheet for free in the Discord. You can print it out, put it on your desk, learn it. In the description, you can join the Discord group for free right here. when you join, you just simply have to qualify yourself. Just simply say if you're a beginner or if you are a pro trader, and then simply go to get verified, and then you just have to put in your user ID from your BitGet account right here, and then submit, and then simply wait until my team approves you. Also, if you can't do KYC or you don't want to do KYC, you can also trade on CoinCatch. They are powered by BitGet, and you have the same tech, same liquidity, and also same systems, and you save an extra 3%. So essentially this here is a ridiculous deal, and this here is out of this world. So you will save a lot of money on every single trade, and you will instantly feel the difference. So you can use both, and you can also join and approve yourself in the Discord with either CoinCatch or BitGet. So both is fine. You can find the rule sheet right here under resources. You can print it out right here in English or German, and also you get many other resources here. And the best part is, on every single trade that you take, you can take a screenshot and post it here in setup ideas, and you will get one-to-one feedback from me and from all the other experienced traders who are trading this setup every single day. And the people are killing it. Like even people who trade only for a few weeks making good profits now. So I'm very proud of all of these people. If you have any questions, please comment them down below. I will read every single comment and help you out with all my heart. I would appreciate if you give this video also a like. Make sure you subscribe, hit the ring bell, and also I linked another video for you right here in the top left corner. Thanks again for watching. I will see you in the next video, and peace.